joins us now. Bala, it's very easy to find why we are down, but what is important is where we are headed and what should one do.
Yeah. So of course, the market is now reflecting various things affecting the global economy in terms of sentiment. Sentiment, see, growth expectations remains more or less the same. Even from India point of view, growth remains the same. The expectation on interest rates momentum remains the same. And overall momentum that we have been seeing from a driver of the Indian economy that continues to remain strong. There's one area where people are also finding a reason why the valuations cannot sustain beyond a point. The triggers have come largely from the mixed result that has come for the September quarter. And second is election results globally has created some kind of uncertainty on commodity prices, food prices. I think the fiscal deficits in the US continues to remain an area of concern. Therefore, to what extent they can cut the interest rates. And even after cutting interest rate by 50 basis points, yields have gone up back to about 4.45, 4.5 in the US. Also, the related impact that could come on the currency side. And with the change in the guard in the US, how the global trades will function, therefore, how the currencies will behave. So, all these uncertainties suddenly actually has become some bit of factors to be considered from the market point of view. Therefore, the portfolio allocation, especially for global investors, I think probably they must be doing a shift in the portfolio allocation from emerging market back to US and so on and so forth. I think current dynamics is on the back of that. But one good thing which I see, as the markets continue to rise, there are always question mark which all of us used to have about to what extent the market rally can sustain, given the fact valuation is getting stretched, it is getting overvalued. Now the markets are trading above the long-term average by substantial margin. So the people are expecting some kind of selling pressure to come. Unfortunately, the current selling pressure which has come, as you rightly mentioned, companies which have done very well, even a normal growth they are given, they got rewarded or maybe they remain flat. Wherever there has been a bit of slowdown, like auto if you see, the moment we saw actually some bit of slowdown, the excess valuation got created, that got corrected, which in my view is healthy from the market point of view, longer term point of view, is very healthy. I think the drivers of the economic growth continues to remain good. It's not, nothing is changing. Fundamental continues to remain very, very strong. And whether it is from macro point of view or from the overall activity levels point of view, it remains very, very strong from various sectors point of view. Therefore, it's something which we have to take it as a period of consolidation with some bit of bias towards the fall.
Bala, in the in the post-COVID era as well, we have seen a good 3 to 4 instances of over a 10% fall just at an index level as well. How much of the fall do you think is behind us? And do you sense that the sectors that you talked about where earnings underperformance comes in, could it turn out to be structural in nature? I mean, especially the consumption basket.
So I don't think structural nature. It's more of it's a temporary, probably the cyclical kind of thing that we will be seeing. I think again, if you deep dive, there is expectation the rural economy will pick up. And while it was picking up, various steps that was taken by the regulators, especially cutting down the credit growth, personal loan got the growth in the personal loan got cut, and we have seen a significant reduction in the overall credit moment that we have seen. Therefore, the cycle of funds which was there, maybe to some extent would have got reduced. Therefore, to reduce the spending power. Second is the monsoon, erratic monsoons. Erratic monsoons, untimely rain has a high impact on the agriculture crop as well. Maybe to the extent would affect the sentiment as well. Therefore, I think Indian consumers are generally preserving nature. I mean, they are not somebody just go and spend as much money as much as possible at all point of time. The moment they see something is not working in their favor, especially in the income level. The moment they see actually the income level could go down because of the bad monsoon, therefore agriculture output could be less, then they become actually cautious and conscious about the fact that they'll not have enough money to spend. Therefore, they cut down the expenditures. I think that's something we have seen. Even the car sales, I think we saw a significant momentum that we have seen the passenger car sales. Now, I think we are seeing some slowdown. This, my view, is more of cyclical nature. But I think we still have the government spending, which of course has got huge amount of spending that kept this year. In fact, the first half of this year, even the government spending was relatively lower than what it was in the past. Not necessarily they are not going to spend the money in the next 6 months. They will of course spend the money. But the fact of the matter is we have seen some bit of slowdown in terms of even the government spending as well. I think it's a combination of multiple things. Urban economy is the one which generally drives the consumption. And there also we have seen some bit of marginal slowdown. Probably I would say having seen significant momentum, I would assume it's a logical sense to have that the current trend we are seeing, it's normal. It's not something which is unusual. Therefore, we should not get unnecessarily worried that whether it will have a structural change, it's going to have an impact, or it's more of cyclical nature. My own belief is it's more of cyclical nature.
So with Q2, you're saying that earnings have bottomed out. This was just an aberration of a quarter.
Yeah, maybe one more quarter we'll have to just see. I think next 2-3 quarters, the kind of momentum we have seen in the last 2 years, almost ranging from 20-25% kind of rate of growth. If it gets moderated, it's good for the longer term point of view. And one of the things which continues to remain, the cost of capital for Indian companies remain very, very attractive. Given the fact the interest rates in India has remained very, very stable, and even companies' ability to raise equity capital also continues to remain very, very, very strong. Therefore, from cost of capital being low, I think most of the companies in the mid and small cap space fundamentally continues to remain better. The balance sheets are more strong, and their ability to actually build the business is very high. The momentum that comes in by way of the public infrastructure spending, public spending, government spending, as well as the private sector spending, which of course is picking up. I think put together, if you take beyond say 1 or 2 quarters, I think we should remain comfortable.
Has the market priced all of these factors in, what you just highlighted and what Nikunj was also talking about earlier, or do you sense further weakness in the market at an index level?
I think for the timing, weakness could remain, not for any other reasons. The reason could be one, the last 3-4 weeks fall is quite large, especially in the mid and small size companies. I think the fall could be in the range of about 35-40% certain companies, and the bigger fall could be even the large companies have fallen by about 15-16%. And given the fact it would have created some kind of dent in the HNIs and retail participation, I think the large participation, see the mutual funds have got ability to absorb this kind of fall. Therefore, mutual fund diversified portfolio, the drawdown this period, especially in this fall, the drawdown on mutual fund portfolio would be the least, given the fact we have a diversified equity portfolio. But if you look at the individual portfolios, I would assume, given the fact they would have taken a concentrated bet in certain segment of the market, the drawdown could be very, very large. To the extent their own immediate participation in the market could be relatively less, unless until we see some of the triggers that comes actually drive the market sentiment a little up. I think we have to still watch out the election results in the Maharashtra. And second is, of course, is the once US President takes full charge, what kind of message he is going to give on various things that he has been talking about, whether related to the tariff, whether related to the fiscal, whether related to the interest rate cut, whether related to the monetary policy action towards cutting the interest rate further. But these are some of the things I think at the macro level people will watch out. Therefore, this current fall may get restricted. At the same time, whether we can look at immediate upside may not be possible, could be late. But at the same time, it's time to actually look at fundamentally sound companies from a portfolio building point of view.
Right. What about these companies that, like you said, that the fact that the market fall may get a bit restricted, you can look at opportunities. Are any opportunities arising at this point in time? Because, everyone is worried to go ahead and catch their falling knife.
Yeah, of course. If you take, I think fundamentals of some of these sectors, whether it is capital goods sectors, whether it is auto sectors, I think fundamentally nothing is changing except cyclical nature. Even metal sectors have fallen.
Why do you say that? When you say that we are going through a cyclical downturn, not a fundamental downturn, there are a lot of factors which are changing fundamentally. For example, there is a big change in the way how interest rates would move now. There is a big change in the way how IT sector would move. There is a big change in the way how fintech and banking would move. There are a lot of fundamental changes which are happening.
No, that fundamental change is of course already there in the price. Whatever the cyclical down that you are saying, the anyway market will react a little ahead of time. Therefore, whatever the step that is being taken in terms of reducing the credit growth, which of course have an impact on the consumptions, the spending behavior, that's already there in the price. Therefore, to the extent some of them actually now valuation wise one has to start re-looking at it.
Give me an example. What you always said was, look, I like the company, I like this guy, I like the business, but I'm not buying it because it is expensive.
No, if you take some of the large drivers of the market, which is
banking.
Let
me guess it, banking.
Banking is one. So if you take
everybody says banking.
So last 5 years, performance of some of the large banks in the country is it's muted. It's not given. It actually perform worse than the index. But the fundamentals are now valuations become attractive.
But Bala, just to have a counterpoint here, and I'm just asking this to everybody so you'll appreciate the spirit of my question, is that if the economy is slowing down, the banks have to slow down. The nominal GDP in India is 12 to 13%, depending on the cut you look at it, right? The bank credit, which was supposed to be a multiplier to India's GDP, if nominal GDP is 12, banking should grow at 18 to 20%. the banks are growing at 12 to 13%, and they will slow down further. And RBI is getting more and more worried about NBFC growth, which technically means that the banks will slow down rather than recover. So why should one buy into banking when economy is slowing down?
No, I think the best time to buy actually when the worst of the news is hitting the market.
Okay.
So whatever we discussed about, whether it is slowing
MFIs
down.
then, Bala.
Yeah, normally that's what happens, right? And historically, if you want to build a portfolio, the best time to buy in the market when the the worst possible news keeps coming in. That is the market actually pricing in its price, and market starts pricing in, and therefore you will be able to get a price at which you want to buy. So that is actually historically I've seen it happening. Second is when the economic growth comes in, the reward could also be equally high, and given the fact that our ambition of becoming a $10 trillion economy is not being taken away in the entire the last 3-4 months, nothing has changed. As long as that remains strong, and credit growth is something which is the driver of the economic growth. Currently, I think RBI is being restricting the credit growth because they also don't want any kind of accident to come and hit the market, and therefore they have been extremely proactive in ensuring that we take some kind of measures that ensures that we actually have an orderly growth in the banking system. We don't want to have any kind of disturbance in the banking systems. Therefore, there also should be seen as a long-term sustainable step that they are taking. So, going by that, valuation is something as we call it the time value correction, right? Every sector goes through a time value corrections. I think my own belief is banking sector would have gone through time value corrections, especially large banks. I think time will come for them to relook at from an investment point of view. If you look at IT sectors, I think if IT sectors have again gone through the consolidation phase, and as interest rates start coming in the US, the spending will increase. If there is a cut in corporate tax in the US, then what will the companies do with that extra profit that they make? Not necessarily they will use it only for buyback of shares. They'll also use it for actually making reinvestment in building technology capital for the future. Therefore, IT sectors can do well.
So banks and IT.
If there is a rupee depreciation, which is also quite possible given the fact currently rupee is about 84. If there is a change in the currency outlook globally, which is of course now seems to be once again coming in part of the discussion. If that comes, then probably start seeing the export sector, even auto has got good component of the auto sector is also coming from exports. Therefore, even export sectors also could benefit. Therefore, I think we'll have to look at it taking into account the current moving parts of the economy.
What focus on not where the puck has moved, but where the puck would move. And NFO, you are raising money, market conditions, if you raise now, the future return would be great. Why are you raising money right now? What is new about this new NFO which you are planning?
So, of course, we have done the BSc infrastructure fund we are given, and given the fact that the way the BSc infrastructure the index has been constructed, with of course the representation of sectors which drives the economic growth, right from road, railways, and port and energy, the entire sector gets covered. Unlike NSE infrastructure, which has got banking also as part of that index. Therefore, it's a pure infrastructure index. Secondly, if you look at the last historical trend, if you see, given the fact it's a pure index of infrastructure, the outperformance of the index vis-a-vis the other index also is quite high. Therefore, the risk that you are taking is also gets rewarded in the form of a differentiated performance. And last, of course, is the next, say, 5 years, if you have to look at 10 years, if you have to look at it, Indian infrastructure will be the main driver of the Indian economic growth. Therefore, having exposure in the segment through the index format, we thought that it could be good time to have that product in the portfolio. Anybody who has got high risk takers looking for high return, but I'm willing to look at the investment for long term, could be the good product to stay invested. That's why we come up with the BSc infrastructure fund instead of the other index which is also available in the same space, because it's a pure infrastructure sectors. That's something we launched it to have the presence in that space. But again, one has to look at 5 to 7 years kind of period, especially on those sectors which actually would have a huge amount of volatility. And times like today, that sector also have seen a significant drawdown. The last almost 3 months, if you see, we have seen a significant drawdown coming in this space. It's also provided an opportunity to buy them when there is a fall.
Absolutely. Couldn't be a better time. But Bala, thank you so much. You could make time and join in today in our studios.
Thank you.
Thank you.
Thank you very much.
Okay, a new listing.
If you like this video, then like, share and subscribe to ET Now.